Welcome back to my YouTube channel. Today I wanted to talk about just investing in general and kind of where the trend of the stock market is going. I'm starting to see a few posts out there about the inevitable pullback or a correction or a crash. What we do know is the stock market's cyclical. What goes up must come down. A correction, a change, a decline in price is inevitable. And what I like to do is be prepared for that decline. I actually get very excited about the possibility of the stock market coming down in price. A lot of people say the market is overvalued right now, extremely overvalued right now, and that prices are way too high. Just look at DoorDash and Airbnb. DoorDash priced as if they're valued at $100 billion. Their closest competitor, Grubhub, sold to a European company for $7 billion. So did they sell too cheap? Did the buyer get an amazing deal? Or is DoorDash grossly overpriced? I think DoorDash is grossly overpriced, but we haven't seen the stock price decline or dip or pull back after the IPO. It's come down a little bit, a couple of percent, but it's supporting that value. As well as Airbnb. Airbnb has lost a tremendous amount of money in 2020 because of everything that's going on. So yes, people are buying it on the potential of future earnings and the fact that there's been a shift from hotels to the rent your own adventure. But we're not seeing hotel stocks decline either. So if that mindset is there, why aren't we seeing these changes? So who knows? But one of the things I like to do is be prepared for a pullback. So one of the things I like to do is to be totally prepared to put myself in a position to be able to take advantage of any kind of pullbacks. So first off, if you're new to investing, you need to get rid of major debt. And what I mean by major debt is debt that has an interest rate above 4 or 5%. That's what you hope to make in the stock market. So if you're paying more than that in interest, you're losing money. Credit card debt out there is massive in this country, and the average interest rate on credit card debt's anywhere from 8 to 28%. So getting your credit card debt paid down or paid off, or to the point where you can pay your balance off monthly, is crucial to being able to be prepared to have the assets you need to invest in any kind of pullback in the stock market. When the stock market pulls back, it's for a reason. Things are losing value. Things aren't selling as well. There's a dip in the economy. Unemployment is climbing, even though we're already seeing really high unemployment rates. But as the stimulus talks fall apart, that's kind of pushing the market down. So you need to be prepared financially. Not only do I believe you need to eliminate your high interest rate debt, I think you need to have, in my opinion, you need to have at least 3 months reserve in your income. So basically what you do is you would take the amount of income you're making monthly, times that by 3, and that's how much you should have saved up as an emergency fund. Now this isn't the money you're going to want to use to invest if the stock market pulls back. You're also going to need to set up that fund to be able to take advantage of any kind of pullbacks that happen. I have a couple of different trading accounts that I use. I use obviously Webull, which you can go down to the description and click on the like if you're not signed up with Webull. They give you some free stocks. I also use TD Ameritrade. It used to be Scottrade, but they've gotten bought out a couple times. And it looks like TD Ameritrade may be getting bought out as well. So we'll see how that goes. But I do use some different investment accounts, and I fund those investment accounts on a regular basis. I talk about dollar cost averaging all the time. I kind of dollar cost average the funds in my account too. I try to do it automatically, so it's not something I have to think about. I just put a percentage of my income directly into those accounts. And I keep it in cash. So I have the buying power that I need to be able to take advantage of any kind of pullbacks. Right now I'm watching SBE. That's kind of one of the stocks I have in my following along portfolio, and it had a large pullback today, somewhere around 11% so far. So I'm following that, and I'm prepared to be able to put forward some money if that pulls back even more. And I do think it's going to pull back more. I hope it pulls back more, because it's consolidating, it's merging with another company, and oftentimes doesn't mean it's going to happen again, but oftentimes when companies merge, the share price comes down during that merger. It goes up before the merger because everybody gets excited and everyone's talking about it. But we are now starting to see a pullback in SBE. I'm pretty excited about that. We also saw a pullback in NEO. Yes, I did buy NEO. If you guys watched my last video, I've talked about it. And I was able to buy into NEO. I did a limit order at a price that I didn't think it was going to fill in, and it filled. So I was pretty excited about the purchase price, but it is even lower than what I purchased it at right now, but not significantly. NEO is raising capital, and they're doing that by selling more shares. Anytime you sell more shares than what you have, it dilutes the value of the existing shares. So that's why we are seeing a pullback in that. Everyone's excited about NEO Day. So we'll see what that does to the stock. I'm holding that one for the long term. I am investing in that company. I am not trading that company. I do believe where we're going in as a planet is to kind of eliminate our carbon footprint. Electric cars has been the biggest push to that, to getting our emissions down. So I'm pretty excited about that. So being prepared for pullbacks and not freaking out if something does pull back. Now, I don't blame you if you start to sell shares, but make sure you're taking profits. Don't sell shares just because you're taking a loss because the market's pulling back. Hopefully you're invested in companies you believe in, so a little pullback here and there, to even to the point where you're losing money, shouldn't freak you out entirely. You always want to sell high and buy low. So I don't mind if you're selling high to take some profits when the market starts to pull back. But realize you need to be buying when that market pulls back as well. And I know that's often a difficult thing to do because, groupthink causes everyone to say, hey, everyone's selling, so I need to sell too. And people start to lose everything when they sell. And that's when I like to take advantage of lower prices. But you got to be positioned to do that. So get your finances in order, get prepared, and good luck out there, everyone. Leave a comment below and let me know what stocks you're following. I'm still looking for some good dividend stocks. So thanks for watching, everyone. Hope to see you soon.